All right, what's going on, guys? Tremaine here, the most disciplined day trader on YouTube. Here's the trade I took this morning live on stream in Discord. It was interesting. So there you see me trying to short three contracts, broker, reduce margins and all that. So I couldn't even afford to put on three contracts. So using two contracts instead, and the entry was a little lower since I had to put up with all that. But that 1 minute inversion fair value gap, that's also your first presented fair value gap after 8:30. And my stop loss is above mean threshold of the bearish order block, those two up close candles there. Aiming for the sell side, those relative equal lows, just over $2,000. This is a live account, personal funds that I'm trading in the stream here. But today was an interesting day. It's just another one of those trading days. We did have no news today. It's coming off a bank holiday. We had Easter here in the States yesterday, Sunday. And like I said, it's a no news Monday. So as far as what I was expecting, not much in terms of precision. I am expecting somewhat of a large range day either today or tomorrow, since Thursday was an inside trading day. Just as a general rule of thumb, whenever we have an inside trading day, the following 2 days I'm expecting to be pretty volatile with a lot of range on the daily chart. So that's kind of what I went in thinking, that today could possibly be low probability given, Easter and all that. But based on what's happened Thursday and how we closed on Thursday, I was expecting some movement today. So most of my annotations was actually done on the micro contract. We switched over to the minis last minute because I didn't want to slap on 30 micros. So there's a few details in opening prices and fair value gaps that are missing from the higher time frame because those were drawn up on the micros. I just didn't feel like redrawing it, so I'm highlighting that fair value gap in the bearish order block. You see me slapping on the 8:30 open. I love shorting above the 8:30 open and buying beneath it. Those are the best opportunities to enter a position. You're getting really good pricing if you're shorting above the 8:30 open. So that last up close candles, bearish order block, we're trading into that. And we're going to fall into a little bit of consolidation here. You see that macro 850 to 910. One of my favorite macros to trade. If you backtest that 20-minute window, it usually gives you a nice little scalp pre-market. If you're correct and you're drawing liquidity, you can pull out 20, 30 handles based on the volatility. You can walk away with a nice piece of change. All right. So at this point in time, I'm not really interested in moving my stop or trying to be cute with it. What I don't want to see is us consolidate around the 8:30 opening price. That's not something that we want to see in a low resistance environment. But hopefully you all had a good Easter for those who celebrate, for those in the States. Well, I guess it's not just limited to the U.S., but hopefully you all had a nice 3-day weekend. I wasn't even looking at the charts Friday, Saturday, or Sunday. Spending time with the friends, the family, went to the Houston Rockets basketball game. And I feel refreshed. Whenever you get a nice 3-day weekend, we don't get those much in the market. Obviously no trading on Friday, so it's always nice to just log off for the day, for the weekend, and just do other hobbies, do something other than trading and looking at candlesticks. So very much needed, and I'm feeling good, man. So still drawing out that inversion fair value gap. Haven't really done much. I would have loved to have a higher entry near the high of that inversion fair value gap, but broker denying my orders and that kind of thing kind of made me get in at a slightly lower price, but that's okay. Really, really nasty consolidation. Nasty, nasty. So trailing my stop, reducing about $100 worth of risk. And consequent encroachment, that wick, I'm telling the group that if we were to eat through that wick, its midpoint, then I'll feel comfortable moving my stop to break even. But at this point in the trade, I kind of just want to be risk free. Too much stalling, too much consolidating, and I'm going to show you something on the 3-minute chart in a little bit. So feedback is looking good here. Consequent encroachment of that wick, we want to find resistance there. Again, aiming for those relative equal lows. Very, very nice. We have a small little fair value gap. I think I point to it in the stream. Maybe not. Oh, there we go. Small little inefficiency there. I'm annotating the sell side. And right there, I'm highlighting that 3-minute fair value gap. I said if we leave that open, treat it as a breakaway gap, then we're in a really banger trade. So something that we're observing. And I think I was up as much as, yeah, $1,200. I could have closed here, but I was real confident that we're aiming for those relative equal lows. For those who've been with me for a while, you know, at this point in my trading, I'm aiming for around 1,000 to 1,500 a week. So at this point, I could have closed it and potentially be done for the week. But it's Monday, it's early, and I want to work on just holding my trades longer and not trying to be so eager to close it early. So this is me kind of practicing sitting on my hands, submitting to the trade, and let it do its thing. Whether or not it hits your TP or not, just building that confidence, just practicing holding for longer targets. It's a little more uncomfortable to know that you can close the trade and be done for the week, but instead you're going to hold it. It's a little bit of an uneasy feeling, but that's how you grow as a trader. I want to hold on to longer moves. I want to participate in bigger moves, more sustained price runs. You only practice that, or you only get there rather by practicing. So I'm holding through all of this. Notice the bodies. Back to consequent encroachment of that wick. And then here's a 4-minute inefficiency. I'm getting his midpoint, telling the Discord members to be mindful of that. And you also have the bodies respecting consequent encroachment of that wick that we outlined, that you can see labeled at 18,105 and 2/4. So I have $200 locked in here, and I'm just trying to see how much I can reasonably lock in. Should we take out that short-term low that just formed? Now I have 250 locked in. So I'm in a great spot. Either I make 2,000 or I make 250. So I'm really content with just holding the trade, let it do its thing. Feedback is looking really good. I like how we didn't have any interest in exploring the upper half of that 4-minute fair value gap. So that's nice. And then that right there was an accident. That should not have happened. I actually wanted to take a partial there, and instead I bought a contract. So I wanted to bank something, take something off, but now I guess I'm short 3 contracts. And I'm saying, okay, well, I added another contract by accident, but I still have $100 locked in profit. So instead of 250 locked in, I have only 100, but that's fine as long as I don't have open risk. I'm just going to go ahead and accept the fact that I have an extra contract on. So managing my targets a little bit, trading back into that 4-minute fair value gap. Still can't trade to the upper half of it, which is good. That's what we want to see. We want to see the upper half stay open. Just a mental error, not paying attention to which buttons I'm pressing. Can't afford to make those mistakes. So right there, I end up closing that one contract I added. So now I'm back at 2 contracts, and now my stop loss is lower because my averaged in price. So this is the trade just gets messy here. And then you just look at the price action as a whole since like 7:30, and it's really not the cleanest. A lot of consolidations, a lot of wicks. So it went from a really clean looking trade to one that management and just so-and-so. Could have been better on my part. And then here you see this was a live account. And target was eventually hit there. So I don't feel any type of way. It's good to see the targets get hit. I could be better in my trade management, focusing, selling a contract when I actually meant to take a partial. That stuff can't happen. But I was able to walk away with $500. I think I put on around $500 as initial risk. So pretty much a 1-on-1 risk reward kind of day. I'll take it. No red day so far on my live account this month. So we're cruising. But that's it for today. Hopefully you learned something in this one. Pretty all over the place kind of execution, but no news Monday, coming off a bank holiday. You know, if I could walk away with something, I'm content with that. So Discord members, I'll see y'all back in the live stream tomorrow morning at 8:15. We're going to try to capitalize off it today and add to our profits. And everybody else, I'll see you when I see you. All right? Peace.